Now here's how the second half of the story goes. We're going to pay the commission and earn the income. So let's imagine, oh, where is it? Here it is. Let's imagine we paid Allstate $900. Now, what do we owe to Allstate? We really owe $1,900, but let's imagine we're only paying $900 on this date, January 25th. Well, that's very easy. We open up the check window. We make sure we choose the right bank account we're paying from. We go to January 25th. We choose Allstate. Now, remember, if you choose Allstate up here, you also have to choose, the window's a little squashed, but you also have to choose Allstate down here, both, from the way that we're doing this. So just keep that in mind. Okay. Now, the account, well, this is payable to underwriters. Payable to underwriters is going down because the bank account is going down by $900. So, by $900, and let's make this check number one. We'll talk about how it prints checks. So we're paying Allstate $900. Now, if we pay Allstate $900, look what happens. Make sure you choose payable to underwriters in the bottom left. Click Save and Close. Aha. Now we only owe, as of January 25th, we only owe Allstate $1,000 because we paid them $900 from the original sale. Stay with the story. Now what? Oh, by the way, if you look at your bank account in the trial balance, you can see your bank account has decreased by that check. Let's double click. These are the deposits that increased your bank account, and this is the check that decreased your bank account. You can double click on any of these to reopen and change anything you want at any time. Now, stay with the story, stay with the story. January 31st, we paid farmers. Well, in the case of farmers, we're paying them everything that we owe, and it's very simple. We click check, and we put 31st, and we put farmers, bum, ba-dum, bum, 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 bum. And we put the amount is $2,000, and the account is payable to underwriters because we're paying that off. So now, if we click Save and Close, and we look, we see we don't owe farmers anything at this moment anymore because we paid them a $2,000 check on January 31. And if you look at your trial balance, you see cash is way down, but payable to underwriter has also decreased, so you know your overall liability has decreased. And that's how you do it. Now, this unearned commission will decrease automatically over time, and it will become earned over time. Well, what do I mean? Well, if we look back at the original policy, we see that if it's $120 a year, that means you earn $10 a month for this particular policy for Alan Arby. That means you'll set up one and only one invoice on the original date of the policy. And of course, you have to choose the company, not the particular client. Choose the company here because that's whom you chose as the customer. You had to do it that way. But make sure that the account is coming from unearned commission. So you choose the company that the policy's from, the unearned commission. Now, of course, you can put in the memo field who the customer is. And of course, this is going to match your individual records here, but you have to put this in like this, and then the quantity and the item code, you're going to put policy sold, which is the only item of income you earned, and it's going to automatically be $10 a month. So actually the date of this, if the policy was sold on January 1, then you didn't earn the first month's commission until January 31. They had to be covered for a month for you to earn that 10 of the 120. So at the end of January, you now earned 10 out of that $120. So when I click Save and Close, and you go back, ignore all the spelling. No. So now when we go back to the trial balance, commission income earned is $10 and unearned commission has decreased to $530. And this is your overall financial picture. But if you look at refundable commissions, you can see that I don't know why. It did decrease. It did decrease. See, so refundable commissions, you originally had $300 of refundable commissions, but since you earned this $10, the amount refundable to Allstate went down to $290. And every single time you make that invoice, which will happen automatically at the end of each month, so at the when QuickBooks automatically makes February 28th's invoice for the Allen RB policy, it will automatically do what I'm doing now in a second. And then when after the second month's invoice, now the unearned decreased down to $280 because you earned it for January and you earned it for February. And again, it's going to keep happening until the amount of refundable goes down to zero for that specific policy. So this is your way of keeping track of what would be refundable at any given moment, and this is your way of keeping track. Of what's owed to the underwriters, and you can see it all makes sense and falls together in the trial balance. So that's the main way that insurance companies need to record when they collect from an insurance company, earn the commission over time, and pay back the underwriter from what they collect from the customer.